Preparing your child on how to borrow money responsibly can go a long way toward establishing good financial habits. Understanding the ins and outs of borrowing early on can have a big impact on their personal finances in the future. Let's explore some loan types to discuss with your teen. Credit cards are a popular method that can be a valuable tool for your teen's financial success, but they can also be detrimental if misused. There might be times when your teen is allowed to make purchases with your credit card, making it a great leeway into the conversation. To jumpstart talking about it, consider exploring the origin of how credit cards work, annual fees and percentage rate calculations, or the importance of paying more than the minimum payment each month. It's also important to explain creditworthiness and how credit scores are calculated. Establishing and maintaining a healthy credit score contains many factors like payment history, revolving credit utilization, length of credit history, and recent credit inquiries. One of the most important things your teen can understand is the long-term impact of a high credit score and how to maintain it. If your teen plans to attend college, a conversation about student loans can be a starting point for the intricacies of the borrowing process. It's important to discuss the long-term responsibilities of taking out a student loan. The conversation should start with helping your teen understand how the loans could impact their finances after graduation. This might include exploring how to refinance the loan for lower payments, exploring income-based repayment options based on loan type, or understanding how interest accrues on student loans. It's also essential to help your teen with understanding the legal implications of agreeing to student loans. It might be helpful for your teen to research post-grad salary expectations for their intended field and get a sense of what it will realistically take to cover the cost of the loan. Payday loans, short-term cash loans that a borrower is expected to repay with their next paycheck, can be tempting in a pinch, but you should encourage your teen to avoid them whenever possible. These loans tend to have very high interest rates and fees, and the result of taking out one of these loans is that the borrower takes home a lot less of their pay. Unfortunately, it is typical for many payday borrowers to get stuck in a cycle of debt that causes them to take out loan after loan. Credit can be a valuable resource if used wisely. Through conversation and practice, your teen can gain lifelong experience in the fundamentals of borrowing, building a strong foundation that will carry them through each stage of their life.